Hi and welcome back to Siren Crypto. I'm Becky, and in today's video we're going to continue a little bit with the theme of trading psychology, and we're also going to talk about some trading strategies. What I'm going to talk about in this video is the idea of trends. Firstly, here's our disclaimer. This tutorial is for educational and illustrative purposes only. We are not responsible for any investments made applying this information or buying or selling recommendations. Siren Crypto are not licensed investment advisors. We make no recommendations to purchase or sell any kind of coin, option or security. Any investment contains risk and is 100% the responsibility of the investor to assess the risks and rewards involved. Trading the crypto market involves a high degree of risk, and you may incur financial losses if you engage in this activity. We at Siren Crypto take no liability, assumed or implied, from your application of the information we share within our training programs. Now, before you switch off, I'm sure when you first looked at the markets, one of the things you were taught and told is trade with the trend is your friend. Now, rather than going through the usual textbook approach in this video, instead we'll talk about why trends form, why they are important to us when we're trying to figure out which way a market is going to go, and also look at some real examples of recent trends. So first of all, let me assume that you know very little about trends, so we'll start from the basics. This is only going to take a few minutes to go through. Now, the classic trend looks something like this. It's a market that's moving higher. And maybe the market sells off a bit, setting a low, but the buyers come back in, and the market moves higher still, and so on. This is a classic example of an uptrend. Of course, trends don't just happen by magic. Now, whether they're trading small, or they're a whale trader, or a bank, or it's an algorithm from some computer somewhere, it's the action of buyers and sellers that move markets, and what we're seeing in the example of an uptrend is that the market is becoming more and more positive. When we see the market sell off, the buyers come in a little bit earlier every time. They don't wait for it to go back to the last low. They jump in and push the market higher. Now, that's the basics of how trends are formed. And we have, broadly speaking, three types of trend. An uptrend where the market is rising, a downtrend where the market is falling, and in a falling market the way to make money is by short selling, and then of course a sideways trend when a market is not doing anything, it's just chopping around sideways. But let's take a step back and look at it. What does that mean to us when we are trading? Now, trading is a game of probabilities. We are trying to stack the odds in our favour. If we see a market that is doing this, the temptation from a human psychology point of view is to try and pick the top. I think plenty of us, when markets are rising, we want to be clever and pick a top, and when the markets are falling again, we want to try and be clever and pick the bottom. However, we do have to try and reverse our psychology, especially when the market is rising like this. What we should be doing is looking to trade with the trend. I know it's a cliche, but it is true. What are the chances that you pick the absolute top in a market that's been rising for days or weeks or even months? It's highly unlikely. It's much less painful to trade in the direction of the trend. Okay, so let's look at a real example. This is a chart for Link paired with Bitcoin, and it has risen from 14926 Satoshi to 35861 Satoshi. Now that rally was around 140%. You can see here on the chart how clear the trend is. Look at that for a second. Where has the clever money been in this market? What has been the way to make money? Clearly, the answer is going with the trend. And looking at the market, where it was and where it is now, you can see that your human psychology would tell you, well, maybe I should be thinking about selling. But hopefully you can see that that would have been the wrong thing to do over the recent weeks. And when we see a market like this, what we are looking to do is trade with the trend. It's a saying you've heard so many times, but you've heard it for a reason, because it works. It doesn't work all the time, but it can be a way of tilting the odds slightly in our favour. If we see a market where there is a clear, strong trend in place, the ideal thing to do is to find the right time to jump aboard that trend. I'll talk a bit more about that in another video when we talk about looking for key levels in the market. Hopefully these last few minutes has helped to explain the psychology behind market trends and what fuels them, and why we should be looking to trade with the trend as traders. Well, that's it for this video. We'll be delving deeper into this in another video. If you like this video, give us a thumbs up. Make sure you don't miss out on all of our videos by clicking the subscribe button. You'll get notified when our next lesson is uploaded. Well, I'm Becky. Thanks for watching Siren Crypto, and I'll see you on the next video. Happy trading!